Okay, so welcome everybody to this new webinar where we are going to discuss currency strength. The focus of today is going to be on the two indicators that you'll all be armed with. The first one being the one you can see here at the bottom of the chart. Where's my mouse disappear to? Here, which is the currency strength histogram. You can see the name of it just here. And the other one is going to be the currency strength dashboard, which is this one here. And the difference between the two is, this one here shows you a lot more information. It's showing us all of the 8 currencies on many of the time frames. So here we have the weekly strength, daily, 4-hour, 1-hour, half an hour, and 15-minute strength information. In contrast to the histogram, which is showing us a currency strength for the given pair that we're looking at. So this is showing us the difference between the strength in the Kiwi and the American dollar. The previous version had a line up here that would show the American dollar and another one that would show us the Kiwi, but I removed that because that wasn't important. The important thing would be to show the difference between the two currencies, because this is ultimately what is driving price. So if we run through this indicator first of all, then we'll do the histogram, and then we'll touch on how we might want to go about using these two pieces of software. Okay, so what I like to do is, actually before we start, let's have a quick look at the configuration. Okay, this configuration for this tool is very simple. We have the mode, which it operates in 4 different modes, so scalp, day, swing, and position. And the difference is that, if you consider the time frames here, if it's in position trading mode, it's going to focus on the time frames furthest to the right here, the 6 time frames furthest to the right. So 1, 2, 3, 4, 5, 6. So we're going to see half an hour information all the way up to monthly information. If we go down to the scalp, it's going to show us minute information all the way up to the 4-hour information. And so you can trade in these 4 different ways. You can be a position trader, swing trader, a day trader, or a scalper. And so I've just made this configuration to make it a lot easier to kind of get your head around. Then we have periods to show, and you can select these. I like to leave it on 6, then you're seeing a very broad range of information. And then we have this one here, which is a look back, and the look back is simply telling the indicator how far back to go when calculating currency strength. So now you are seeing currency strength now compared to currency strength 13 15-minute periods, half an hour periods, 1 hour, 4-hour, daily, and weekly periods ago. So what you can see here is currency strength now compared to currency strength 13 weeks ago. And so you can get a pretty good grasp on what's moving and why. So this is tremendous information. Then we have this enable look back average, and this is simply a small feature that I implemented to tell the indicator to calculate a moving average of the currency strength information. This maybe helps smooth things out a little bit, but I don't really use it at all. Actually, I just keep it. I like to keep it as it is. This seems to work pretty well. Then we have just some settings regarding the colors. The current period text color, which is white, and you can see the white text here. This simply shows us what currency strength column corresponds to the time frame that we're looking at. So you can see we're on the hourly chart, and we have white text here. So this is actually currency strength for the hourly chart. If we click to the 4-hour chart, it's going to jump here further to the left, and it's going to highlight the 4-hour chart, or currency strength rather. Then we have the dashboard color, which you can see here. Then we have symbol, prefix, and postfix, and this is just related to the currency pairs. You can see here my symbol is NZD JPY, and there is no prefix or a postfix, but some brokers have, for example, .pro. I know one of the, maybe it's an American broker, they append .pro to the symbol, so it'll say NZDJPY.pro, and so you have to tell the indicator what the symbol looks like so that it knows what the symbols are going to be called. But very brief, that's all it's about. I've left out so many configuration options, and all the the core of the indicator is inside and programmed into the indicator, because I wanted to make it as simple as possible to use. Okay. Okay, so now we can see that we have to update the strength information. You can see it's kind of struggling there. It's downloading, has to download some strength information. But what I like to do here is first of all, let me change the configuration to swing trading, which I like. Okay, so what I like to do is I like to, first of all, you have to consider how you trade. I am a longer term trader, and so I like to choose the swing or position trading configuration. Sometimes I'll put it on the scalp configuration, but what this means is this. Once you set it to swing trading, you want to focus on the columns that are furthest to the left. You want to find the currencies that are being bought and the currencies that are being sold, and you can see here that we have the euro, which is strong, which is being bought. We have demand for the euro, and we have supply for the Aussie dollar down here. And so if we look at the euro Aussie dollar, this pair should be moving north. And again, this is going to be much more profound information. So because this is on the weekly chart, we go to the weekly chart, you can see that it's really moving up nicely and nice and strong, like you can see. So what I want to do is I want to find currencies that are strong, and I want to find currencies that are weak, and I want to pair these, and I want the same story being told on the long term and the medium term, or more or less. I mean, I can have the euro, which is in first place on the weekly, but on the daily it maybe is on second place or third place. That's also fine. I just want to see the currency that I'm buying to be kind of towards the top of the list. I want the number to be maybe 1 to 3. So we can see that there's a keen interest on buying the euro. Then I want to do the same for the weakest currency, and this one I just want to be either 8, 7 or 6, preferably 7 and 8. So the strong currencies preferably 1 and 2, and the weak currencies preferably 7 and 8. And you can see the numbers next to them here. And I've also highlighted these, I've made this very visible simply by looking at the color and the thickness of the font. Here you can see that the bold green is the strongest. The normal green is the second strongest, and we have the bold red, which is the weakest, and we have the normal red, which is the second weakest. So I've kind of color coded this to help make this very clear. So what I'd like to do, I'd like to see currencies that are being bought. Here you can see we have the euro that is being bought, and we have the Aussie that is being sold. So you can see here very clearly that we want to be positioning ourselves long the euro Australian dollar. And so I use this information to tell me what to trade, and I use the supply and demand indicator to tell me where to trade. And you can see very clearly we have a nice area to buy right here. I've got an alarm just here around the 14500 area. We have another one here, and we have another one here. So here we have 3 areas that we could consider to buy at. Which one do you choose? You choose the one that's closest to price. And again, according to the quality checklist that we discussed in one of the previous webinars. And so this is great. So you can see here very clearly the euro is an attractive currency for the time being, and we have the Aussie, which is currently being liquidated and being sold off, as you can see here. You can see also here on the pound, so like on the shorter term, like a shorter term trade, we have the pound, which is being sold, and the franc, which is being bought. So if we have a look, if we have a look at this pair, the pound franc, this should be moving lower. Pound franc, this should be moving lower, which it is. Again, we're on the daily chart, and this is 4 hour and half an hour. So we're going to want to go to the 4 hour before we can see this. You can see here it's selling off pretty nicely. So again, we use the indicator, the text indicator here, the currency strength text indicator, to show us or to tell us what to trade, and we use this, the supply and demand, to tell us where to trade. And where do we trade? You can see here we're reacting on weekly and daily supply, and we have this, and we have a couple of overlapping areas here that we can just box off in one. We have these going on here. So again, you can see we want to be selling this pair because of this, and the other software is telling us where to sell. So it's pretty awesome combination. Come on. Okay. So that's very briefly about the text indicator. And then we have this other one, which is a really interesting tool. Let's find a clean chart. Okay, so we have this one here, and this is remarkable because it's doing something very interesting. What it's doing is it's showing us the difference of the currencies that are currently being shown. So you can see we have the euro, British pound, and this is the difference in the strength between the two. And so what you can do is you can, if you have a look here for the timing, you can see that the euro British pound is moving higher, and you can see that the euro is stronger than the pound, but we don't know if that's because of a strong euro or because of a weak pound. So what you can do is you can go here and you can say, well, what is it, the strong euro or the weak pound? And we're on the 4-hour chart. You go to the 4-hour chart here, just here, and you can see it's a result of both. Actually, we have both a strong euro and a weak pound, which is good. So this pair is screaming north, which tells us that this area of demand may not hold for very long. You can see prices currently nibbling at it, so we're starting to consume liquidity there to fill the orders, but it looks like that price is going to have an attempt at moving through it. If it doesn't manage to consume it, it'll poke through and then it'll retrace to an area of demand and then have another go at moving higher. And so this stuff is great because we don't really need to know what is strong as one is weak. We just need to know that one is weak and the other one is strong. And so the general rule of thumb is if your long-term trend is the daily chart, then you want to be trading in line with the histogram. So when the histogram is down, you want to be selling. When it's up, you want to be buying. But it's not that simple, as I'll show in just a moment. But for example, if you're trading in line with the daily trend, then you want to keep an eye on this. You can also see it on the price chart, but this is just confirming what's going on. You can see that throughout this period here that the euro was being bought and the pound was being sold. And so you go 2 time frames down to your entry time frame, and you would look for places to buy in the price. So you'll be buying demand ultimately. So this is great. You can also see here that here it's starting to tell us that we should be looking to buy this currency pair. And there's a bunch of people at the door. Let me let everybody in. And so I mean that can certainly be possible. Let me let all those people in so they can answer questions or ask questions rather. Okay, good. And so you can see that, like, yeah, we should certainly be buying, but you also have to consider something also such as divergence, which is an incredibly interesting way to trade. And this is where this indicator really shines. So if we go to, for example, a smaller time frame, maybe let's find the Aussie, because I know there's been a lot of examples of this over the past period of time. Okay. First of all, before we do anything, we want to identify an area here which was traded earlier. Okay, so you have your charts marked off, supply and demand, and you can see that price is approaching an area of, in this case, demand. You can see we have a lower low in price, but you can see here that the strength information is not supporting this price movement. And so this is what this pair is doing, but the Australian dollar in relation to the American dollar is picking up in strength across the board. So all of these other currency pairs here are not supporting this price movement here. You can see this one is going down, but all the information here, which is what this indicator is reading, is telling us that this is not going to continue because the strength of the Aussie in relation to the dollar is starting to turn around. So we are starting to see flows move into the Australian dollar and out of the American dollar. And so this is where it's great, because You can see we have a daily area of demand. Let's draw that a little bit clearer so we put it right on the money. So we'll just put it there at the top of the accumulation. So you can see here that price came down into here. It poked into there, and you might be asking yourself, okay, well, is this level going to hold or not? You can see here that, yeah, there's a very good chance that it's going to, because the strength of these two currencies is not committed to moving lower. And so you can see that this happened here. Additionally, we had a similar price movement here. You can see that we had lows in price, but the indicator, the first one was supported, but things started to get flat, and then they started to move higher here. So again, we had currency strength divergence. This was a second test of this area of demand. So you may be asking yourself, okay, this is the second time back. This is lower probability. What should we be doing? Is this area going to hold or not? And you can see here that it looks like it's probably going to hold. Price stabilizes. It starts to feed into this area of demand. These big limit orders to buy get filled, and price flies up north. What do you do when price goes like that? You look at the area of demand to buy, buying in confidence, knowing that we had divergence at this area. Price came back to the top of this white candle, the accumulation, prior to the green candle, and this is where the trade happened. You can see the same thing happening here. I mean, this area has been taken out, and so you ask yourself, what area of supply took out the demand? Well, it was the one. I better move to the daily chart. It was the one up here. So now we have our area of supply that's in charge marked off. And again, we can look at the histogram. You can see here that the histogram is moving lower. So we're currently in a bearish. We have a bearish stance for this pair. But you can see here we are reacting on something. You can see that price started to move lower here, but the strength is not supporting this. So this shows us very nicely that the price fed into a deeper micro area of demand, that further to the left in the leg that this whole price structure is standing on, and now it's starting to move up a little bit. And you can see that we have the histogram showing us that we might want to look to buy this currency for the short term until price perhaps reaches this area of supply up here, as we spotted on the daily chart right here. And so this is where this indicator is very powerful. Let's have a look at another example. We could see that on the daily chart, you can see, I mean, I had a position in to sell this pair here, which I pulled off. I wanted to sell right there, and I pulled it off. And why did I pull it off? Well, I pulled it off first of all because this. You could see that the pound was picking up in strength. It was standing on a very strong, like a leg, like a flagpole, like that. Price moved up, it consolidated, and it was sticking to the area just below my entry. It was right here. My entry was right here. When price went up, it almost filled me, and then it started to do this. And then I pulled the order off. Why? Because you can see that we have a lot of strength continuing with this pair. We can see that flows are continuing to flow into the British pound and out of the American dollar. There's no divergence here. We're not having prices moving up. You know, we get like a high, we get a higher high. The strength information is not showing us or telling us that this current price movement is going to fade and continue to move lower. And so for the time being, I don't want to be selling. You want to be either waiting for a signal to sell or looking for places to buy, which are at these areas of demand, like in this little flagpole that we can see just here. We get onto the 4-hour chart. Maybe we can start to see area. Yeah, okay. Here on the 4-hour chart, you can see that we are starting to see some divergence occur. You can see that we have this high here. We have a higher high in price, but the strength information is beginning to dwindle just a little bit. And so this tells us that for the shorter term, we are again on the 4-hour chart, you could consider to sell. But longer term, this is not at all what we're seeing. You can see here on the weekly, we have the histogram has popped up to the upside, and so that would make me a little bit careful about selling for the time being. And so I'm using this a lot as a filter as well to tell me, maybe to keep me in the trades. Yes, we are, Bren. I can see you're asking the question. Yes, this presentation is being recorded, and I'll upload that as soon as it's recorded and finished. So price is kind of moving up. We're forming this top. The strength is moving down like this, and so it's just an incredible filter for exactly that. You can see here as well. We have a low, we have a lower low, but the histogram is not supporting it. It's telling us that it's probably not going to continue. And eventually price managed to come. We made a lower low, but this push lower is a very clear price seeking liquidity scenario, more than that it is people selling. So if you look at the price pair, so a price chart like this, this is just a very clear example of price trying to find those big orders to push price higher, because the strength of the pound in relation to the dollar at this stage here was definitely to buy. Price came in here. We found the edge of this monthly area of demand. We almost tested it to the pip, and then we found some big pull, some big order, and this was enough to hold price for the medium term. And our price has wriggled higher ever since into this area of weekly supply here at the top. Let's have a quick look at the configuration for this indicator here. We have here a setting called the look back, and this is set on 20. This is fine. I don't really fiddle with this setting so much, but you're welcome to experiment a little bit. But I recommend that you use 20 initially, and you can once you're comfortable, then you can perhaps change it to values greater and smaller, just to experiment. We have line width, which simply specifies the thickness of these lines. Again, we have the symbol prefix and postfix as on the text version, and when we have the colors, so histogram and zero line here. So I mean zero line, if you want to change this to, for example, magenta, then the line there will turn magenta. If you want that, that's pretty much it. So I mean, there's nothing really too crazy going on here, and the configuration is very, very simple. Again, to keep things as simple as possible. Okay, and so now we find another example. Honetta is saying, look at the yen pairs. Oh, nice. Trump revealed highly classified news to the Russians. Great, Donald. We didn't expect anything else. So if we have a look, let's have a look here. You can see here, as an example, you can see prices continuing to move higher, but the strength of the American dollar in relation to the yen is not really showing that. You can see it's going down. And so now it's starting to slow down, and now we've actually crossed below the zero line, which is giving a pretty good indication that price is probably going to move down a little bit, at least into the first area of demand, which is just down here. And so it's just a really good indication to follow along with the development of the currency strengths in relation to each other. And it's not showing anything but the currencies that you can see on the chart. So this histogram is the difference in strength between the American dollar and the Japanese yen. That's it. It's not showing anything else. So I had another version that was drawing a bunch of different lines. I've discontinued that because people were simply getting too confused and asking too many questions and overcomplicating it. And so this is a completely simplified version of that indicator, but it only focuses on the currencies that that the indicator is attached to. So if we have a look here, let's see if we can see what's going on. See if we can find some divergence at this level. Okay, you can see that, okay, price was reaching this daily supply here, a very clear daily supply. It went up there. As price was racing, you could see that price was really racing towards this area. We had demand respected, so we might think that, well, we have higher lows. Price is really moving aggressively up towards this area of daily supply. Is it going to hold? Some people might put their limit order in, or some people might want to wait for confirmation. So if you go down to the smaller time frames, we can't see it on the 4-hour, but on the hourly you can see that here we had this big push in price. We formed a high in the histogram, so this supports this. Then we had an even higher push in price, so higher high here, but this was not supported in the histogram. So price, it reached up here, we moved back down here, we tested this area of demand. Price had another push higher, but the strength of the dollar in relation to the franc jumped to a third of what it was. And so this is a very good indication that price is seeking the liquidity here to move price lower. And price sold off here. We moved up here to this area of accumulation, the top here, and then price cut down and really sold off in a real hurry. So this is just another really good indication of what the histogram can be used for. Divergence, it's an incredible tool for that. Okay. Let me see. So today, as a matter of fact, I was looking to buy the CAD Japanese yen. Let me put that on here. The trade is off. It was a shorter term trade. And I was watching this, I think it was on the hourly chart. I was watching price. I mean, the CAD was very strong. The yen was weak. It's starting to pick up some strength now. And it was price was racing up high here. And so I identified this area of demand that I wanted to buy at, and I was prepared to buy that throughout the course of the European and the American sessions. Price never came back, so I closed the order. Why? Because things can change overnight. And you can see that the Japanese yen is starting to attract some buying at the moment. So that's good. So I got out of that trade. But you can, the beauty of this is that you have an incredible amount of information right in front of you. And so you just have to eyeball the currencies that are being bought and the currencies that are being sold. You can see here, medium term, in the middle of the rows, like the middle rows here, we have that strong pound and that weak Swiss franc. So medium term, kind of short medium term, we want to be selling this currency pair. If you look over here, longer term, we have the euro, Australian dollar is being bought. And so you want to be buying the euro, Australian dollar. And here we have the shorter term, we have the American dollar, Japanese yen is being sold. And this is shorter term. This is the 50-minute chart. We go to the 50-minute chart and have a look. You'll probably see that this pair is really traveling south in a hurry. And you can see it's firing lower, moving very, very quickly lower. And you can just see this very, very clearly here. Now we're reacting on the indicator. By the way, look how precise the indicator is marking off these areas. It's still, it dumbfounds me how precise these levels are. Anyway, price is moving down very, very quickly, very, very quickly indeed. See, the yen is picking up in strength. The American dollar is starting to turn lower, and this is reflected very clearly here in the way price is moving. So it's just a very, very clear picture that's being told. And you know what? Only a fraction of the people who are trading are looking at currency strength, and the people that do look at currency strength don't even really know how to use it. They are typically looking at an indicator that looks like this. Where's currency strength? Currency strength. GFX. They're looking at a currency strength indicator that looks like. Let me delete this one. Looks like this, for example. It's looking like that. And so they're looking at this. This is the typical configuration that you'll see people use. And so, they're looking at this and they're trying to make trading decisions based on this information. And while it's very pretty to look at and it's very entertaining to look at, it's not providing an awful lot of value. And so so it's important that you can draw real value out of the indicator so that you can make better trading decisions. And so this, I came to the conclusion after years of using this that it wasn't providing its users with enough value. I was using it and I was having a lot of success with it, but I've been using it for such a long time that I just got used to it. But I could see very quickly that compared to the other indicator, the amount of information and the quality of the information is very different. If we put this one on here like this, you can just see that you can see the difference. This is like visual, it shows us some colors and stuff like that, but it's only showing us strength information on the time frame that we're looking at. So this is 15-minute strength. So you can see here that we should be, if we put the configuration, so it's the same, we'll put the configuration 21, and on this one we'll put it on 21, so we have the exact same data. And so this is the 50-minute chart. This is okay, we don't even have that low. Okay, so if we go here, this is the half-an-hour chart. This is a half-an-hour chart. So we have the Swiss franc, which is the strongest. You can see it at the top there, the lime green one, and the Kiwi, or the Aussie, which is the weakest. So we have the Aussie, sorry, the Kiwi, which is here, and the Aussie, which is down here. So these are the bottom half of the scale. If we go to the hourly chart, we should have the CAD that's at the top and the Japanese yen that is at the bottom. The Japanese yen at the bottom, and we can have you see we have the CAD here, which is moving up north. We're still downloading currency strength information, so it's not entirely accurate just yet. Have to iterate through those, but you can see here we have the American dollar, which is also pretty weak. You can see that the greenback just here, and we have the Japanese yen. We have the Swiss franc, which is towards the top, and the CAD, which is towards the top. So we have the Swiss franc, which is here, and the CAD, which is just up here. And so, I mean, but looking at this, a lot of the attention, a lot of the energy on using the indicator was spent on interpreting the angle of these lines. And doing that was a little bit detrimental because there wasn't a whole lot of value in that. And so I said, okay, we don't need to look at this anymore. We have to focus on this, because here we can see we have the euro, which is being bought, we have the franc that is being bought, we have the Kiwi and the Aussie that are being sold. That's all we need to know. This is showing us what's going on the hourly chart. This is showing us what's going on all of the time frames, from the monthly down to the half an hour, which is incredibly powerful, very, very powerful. Okay, Kat is asking, the GFX looks fancy, but I'll take some time to know the color corresponds to which currency. Yeah, you can, exactly. I mean, this one here, you can see which colors correspond. I have, this is like the euro, the European flag, it's blue. The greenback, the British pound, there's red in the flag. Swiss franc, that was kind of one of the colors that was left over. I don't know why that one got that one, but I mean, we have kind of gold in Australia, so we've got a bit orange. In New Zealand, we have a lot of cows. Cows live in fields. Fields are made of grass and soil. The soil is brown. So I tried to make them as logical as possible, the colors. But so this indicator has been discontinued because I want to focus on this, and this is much more powerful as we can see. And so, just to run through, just to show you what I did this morning when I opened my charts, I had a look at this, and this is what I was doing. So I'd go here, I'd have a look. I was doing shorter term trading today because I had to do some security work. So I was on the day trading configuration here. So what I'll do is I'll have a look here, kind of towards the left. You can see here the euro is being bought, and we have a weak yen and a weak Kiwi. This is not a perfect reading, but just for the sake of example, we'll grab it. So the euro Kiwi, which is just here. So this pair should be moving higher, which it is. And so ideally, you just want to look for a place to buy. So you have your long-term, medium-term, and your entry time frame. So the entry time frame is 2 less than your long-term time frame. And so that means that you're allowed to take trades on the entry time frame or lower. And so if you're not finding clarity on your entry time frame, which is the 1 hour, so we should be buying here. If you're not finding clarity there, then you're allowed to go to any of the other time frames smaller to find that area of demand. And you can see we found one just here. So this would be somewhere we would consider to buy. Not now because we're out of session, but during a session this might be an interesting area to buy at. And again, the choice of this pair was based on this information here. We have another one. We can see that we take the euro, Japanese yen. So this should also be moving higher. Yeah, this is one we just looked at. You see the price dropped off. So if you go to the long time, which is the daily, the long term, you see it's moving up very nicely. So we have the long term, medium term, the entry time frame. So to be buying the euro Japanese yen, we want to be on the hourly or less. And you can see on the hourly we have this. We have a parent, we have a child. Here is the demand. This is a reaction to the demand which is here. As a matter of fact, it took this right there, it reacted at the top. And so the entry for this trade would be this one. Keep in mind the fact that this is a second time back, so lower probability. So you could go to a smaller time frame and you could pinpoint your entry to bring the entry lower, which we can do here. So you can see this one, you can say, okay, wow, price has not been back to this half an hour area of demand. And so again, we're trading in line with the currency strength, and we are trading based on the supply and demand indicator. It's telling us where to get in. And so it's just an incredible edge, and it feels like cheating almost. I have, I don't know, hundreds of people using this software, and people writing every day and saying it almost feels like cheating because it's such an edge, and it really is an edge. It's an incredible edge. And I think you'll find that too. I mean, just looking at this as a filter, even if you don't use this to enter trades, use it to stay out of trades. It'll help reduce your losses because you can, for example, if you're looking to sell the to buy the Aussie Japanese yen, you look at this and you say, wow, the Aussie is actually the weakest and the yen is the strongest. Maybe I don't want to do that for the time being. So you can either pass on the trade or you can wait for confirmation, because sometimes a currency pair like the Aussie Japanese yen, as you can see here, could be going south in a real hurry. Let's have a look at that pair. This is a small time frame. You can see it's going down very quickly. But I mean, on the long term, you might be wanting to buy, but the shorter term, these currency strengths can turn during a pullback. And so you also have to keep this in mind. So you want to focus on the longer term, and you also want to focus very much so on supply and demand, which the indicator is bringing to our attention. But it's an incredible tool, an absolutely incredible tool. And I mean, if you combine this with the histogram, then you're really seeing an incredible amount of information, and it's really showing you the underlying driving power of the market. If you consider, for example, this pair, so if you're making all of your trading decisions to buy the Kiwi American dollar just by looking at this price chart, you're actually looking at 1/28th of all of the information available. And I mean, the currencies, in contrast to commodities like gold, for example, if you look at a gold chart, I mean, all the information that you need to trade gold is in the price chart. But if you're looking at the Kiwi American dollar, you're only seeing a fraction of the information you need to focus on. And the histogram and this the currency strength dashboard is bringing the other information. It's making it visible too, so that you can just make better trading decisions. So it's phenomenal, and I think you'll really like it. It's a tremendous tool. But the best thing to do, I think, is to install these indicators, do what you would normally do, and just keep an eye on it. Watch when price comes up to an area like this of supply, daily supply. How is the Aussie Japanese yen currency pair affected in the currency strength? You could see here that price went up. So this one was probably green and this one was probably red. But when it got here, it fed into this daily and 4-hour area of supply, and that slowed down the currencies. Then you could see that these two currencies started to swap. Now the Aussie got weak and the Japanese yen got strong. This confirms that this area is going to hold, and then you can look to sell. But it's just a phenomenal tool, a very, very useful tool. And I wouldn't focus too much on the values in parentheses. This is simply the strengths you can see here. mean 0.171, that's the strength of the Japanese yen. Minus 0.062, that's the strength of the Australian dollar. So it's just meaning that I wouldn't focus too much on those numbers. All you really need to focus on is the number next to it, and like corresponding currencies that are aligned throughout the different time frames. This will really help out. Today on this CAD Japanese yen pair, I was looking to buy, and it was moving so quickly north. Let's see what time this is here. Okay, 10 o'clock. This is okay. So this is 8 o'clock my time, 8 o'clock in the morning. So when this bar was being formed, the price was flying north, and I really was wanting to find a place to buy. And you can see the price came down to here. We had this little area of accumulation, and it poked into it, and then it went higher. And it was just really flying. And when it goes like that, you think like, wow, price is never going to come back. And sometimes, well, previously, maybe 2 years ago, when I was trading exclusively currency strength at the London Open, I was simply clicking into trades. So I'd see this going on, I'd look at this happening, and I'd click into trades. But I was often getting a bad price. I'd get in here, maybe price would go up and then come back. So it'd go positive, then I'd get a bit of drawdown, and then it would finally react. So in order to help preserve psychological margin, I was waiting for these pullbacks. And so instead of just clicking in, I'd wait for price to pull back, again in line with the currency strength before I'd be getting in. Okay, Card's asking, what does active mean? Well, this simply shows you which currencies are on the chart. So you can hear we have the CAD, and we have the Japanese yen. So the CAD and Japanese yen. So it just shows you which row is currently active, the currencies, which currency rows are active, which we have the CAD and the Japanese yen. So it just helps you to quickly kind of fast forward onto those. You go like this, it jumps up to here, we have the Aussie and the American dollar. You can see how it swaps around, Euro US dollar, just to help you kind of grab a hold of it visually a lot quicker when you're just scanning the charts like this, just to make it a bit easier. Excellent, good. Does any of you have any questions about these software packages? It's pretty straightforward. It'll just take a bit of practice, I think. Michael has been, I know he has a strategy that he's been trading for a long time, which is based on the MACD. And you can use the MACD, but I recommend that that you look at the histogram as well. So if we bring, okay, let me just show you the difference between the two. I've got a MACD somewhere here. If we put that on there, okay. So it's showing us a kind of a similar thing. You can see here that, I mean, the MACD, you see these are both above the zero line here. You can see the same thing going on here. Then there's a little drop off there and a little drop off there. You can see all of this here. But the difference between the two is the MACD is based on two moving averages taken from only the Euro Japanese yen. And the histogram is it's considering the strength of all currency pairs in this symbol set here, where the euro is a part. So it's looking at this one, this one, this one, this one, this one, this one, and this one. And it's calculating an index for the euro, and then it's doing the same for the Japanese yen. So it's looking where the Japanese yen is. It's here, 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 and here. And it's doing the same thing. And it's subtracting the two index from each other, and this is where we get the histogram from. So it resembles the MACD, but the MACD, the data set that the MACD is based on, is not terribly profound. And it's a bit of a lagging indicator as well, where this is showing you kind of bleeding edge developments in currency strength across the board. So it's a very useful tool, very, very useful indeed. But you can see it's showing similar information, but there will be small nuances and difference in the two. Excellent. Okay, Car is saying here, so in general, you first use the currency strength dashboard and histogram to identify which pair to trade and which direction to trade with, and the supply and demand levels to identify a good entry level. That's exactly what I do. And I'm trying to incorporate shorter term trading into my kind of trading way of trading portfolio. And so what I'll do is, as I showed earlier, I go, it's a bummer it's not updating strength here, but I go in here in the morning and I'll have a quick scan here, and I'll just simply look at this and I'll say, okay, what should I be buying, what should I be selling? And normally you can see very clearly what should be buying, what you should be buying, what you should be selling. And then I get that if we have a look at the, let's say the Euro Aussie. We'll grab the Euro Aussie. So I know longer term I should be buying this. You can see the Euro is strong, the Aussie is kind of weak here. And so then I go to the smaller time frames and identify an area to buy. And I use the supply and demand software to show me where to buy. It's just a pretty simple approach actually. Good. What about, anyone else have any questions about this? Let me see, there's some people at the door. Let me let everybody in. Excellent. A nice turnout, considering the fact that not many people knew about the presentation. Yeah, it's pretty beautiful. I'm going to see if Michael's here, because I know he has been using the indicator. Right, Michael, you there? He's on the telephone. Okay, Derek is saying here, I don't think we have the text format. Yeah, I think, well, you can get the text format. You'll get the text format. William is asking, so when you click on the pair, you compare the two rows for the two. Yes, but I actually let the dashboard tell me what to choose. Let's move this like this. So I actually let this dictate what currencies I'm trading. So you can see here, I should be selling the pound and I should be buying the Swiss franc. So this is the pair that I bring on here. So this pair I should be selling. You can see prices moving lower on a pretty small time frame. You can see it's moving lower. And so I've identified this pair based on this, and so I know what I should be doing. I know I should be selling the pound and buying the Swiss franc, and I use the supply and demand software to tell me where, which is maybe shorting roughly around here. Yes, but of course, I mean, I'm just saying roughly around here. I just eyeballed it. It looks like a nice level. It's around the big figure, but ideally you want to do your proper supply and demand analysis, as we discussed in the other videos before identifying these areas of supply and demand. They should jump out at you. This one does here, and this one is good because when price left here, we managed to move below these and also move below this, which is like a couple of nested areas just here. Yes, Car's saying also the dashboard helps a lot while creating a watch list. It really does. I have a whiteboard next to the left side of my desk, and I write the pairs on my whiteboard that I'm eyeballing for the current session. And it's really helpful. It's incredibly helpful. Okay, some people here are writing here in the questions box. Let me bring this out, have a look. Hey Carl, I just saw your message. I'm doing very, very well. I hope you're doing well as well. Okay, David left. He's probably in the other room. Yes, so Stephen, the number 20, I think I walked through this, but just to be sure, it's actually on this indicator. Yeah, the number 20 here is the look back. And so I have told the indicator by specifying 20 that I want to look at close prices now compared to close prices 20 periods ago, which if you're an hourly chart, it's going to be 20 hours ago. 15-minute chart is going to be 20 15-minute periods ago. And you can change this, but I found that 20, 21 is a pretty good value, and you can see that. I mean, if I was to set this to 21, for example, or even 13, see 13, then it would resemble the configuration I have here on this indicator, which is 13, look back. So this is the exact same setting. Molten is saying, hi Siri, can you go over how to bring up the Pipnotic currency text position again, please? Yes. Do you mean, are you referring to when how I find pairs to trade? Yes, okay. Yeah, what I'm doing is, I'm looking at, based on how I trade. We might have, we have a lot of traders in the room, so there are going to be some people that gravitate towards a more aggressive, a more shorter term, a more busy, more exciting approach, and we can have others that gravitate to a more relaxed, laid back way of trading, which is more longer term. And so here you go in the indicator and you select the way you want to trade. I should almost have position trading in parentheses, have like a kind of like mellow a mellow setting, and like down here I could maybe put in parentheses like 2-year-old like a really busy, super busy way to trade. So if you put it on scalp, for example, then it's showing currency strength information that's here and now. You can see it's moving, it's very busy. So this is 1 minute strength information up to 4 hour strength information. So if I was going to take a shorter term trade, again this is scalping, so this is currency strength here and now. I want to pair the pound Swiss franc. You can see again this is the pair that's jumping out at us, and we want to be selling. So long term, this is our long term time frame. So we can identify here we have actually an area of supply that looks interesting, and above that we have this one here. So here we've identified 2 areas to trade at longer term, and you can see that this information is showing us very clearly what the development of price is doing on this chart, and the supply and demand software is showing us where to sell. You can see the first area we could consider, we have this little continuation pattern here, we have this just here, and above that we have this one just up here. Price has been back to this. By the time price comes back here, it would have been back to here already, but you can see this one here, when price left here, it hasn't been back to the 129.50ish area. So this is a decent area to sell at. If you go to smaller time frames, of course you're going to find, we can go to 5-minute chart even, and you can find little tiny areas which to sell. You can see here that we have a nice breakaway. This is the one we saw that looked clear on the 1 hour chart. You can see how price accumulated, then it cut below, we accumulated, we left, we tested this area of accumulation, we sold off, accumulated, sold off, price came back to the bottom of this accumulation candle once, twice. On the next approach is probably going to go through it and want to find something a bit deeper, so maybe around here or maybe around here at the top. Yes, Gary, all of this is recorded, so you'll get everything to review again later. Okay, so that's what I'm doing, and you can see, it's changing all the time. If you want to slow things down again, then you can change the look back. So you can change the look back to, okay, I want to slow things down a bit. I want maybe 21 periods, and these are just periods I put in. They're just Fibonacci numbers, but they could be anything. They could be 1, 2, 3, 4, 5, 6, 7, 8, and up to 50. But it's just to reduce the numbers. It doesn't really matter what they're set at. It's not like 13 or 17 or some specific value. I just use Fibonacci numbers because I like the rate of acceleration in the numbers. They fit very, very nicely. But I could have put 5, 10, 15, 20, 25, 30, 35, 40, and so on and so forth. But it's just, you just find a number that fits. I normally, between 8 is on the fast side, 21 is on the kind of the slower side, 34 is pretty slow. So I normally like between 8 and 21 normally. 21 is a pretty good one, so is 13. And this kind of slows things down a little bit. And here, looking at the this configuration, we can see that the pound Japanese yen is being sold, and I'm pretty sure that we're reacting at some greater period supply. And you can see here that I remember we were reacting at some, this area of daily supply I was looking at today. You can see that, I mean, price is probably going to continue to move lower. So you could either click in now or wait till price comes up here. If it does come up here, then maybe it'll react to some of these areas up here. This is not a pretty area, as you can see, but so I'd probably expect price to, we have this area of demand, it's been tested once. If price moves through this one here, then you sell the supply that took out this area of demand and follow it down to an opposing area of demand, which we don't have any of until like around here or here. And so price could really continue lower for quite some time on the pound Japanese yen. Excellent. Any other questions about this stuff? Let's see if Michael's here. Michael, can you hear me? You there? Yeah, cool. Just if you want to add a couple of comments about what you've seen using the currency strength, because I know you've been experimenting with it for a bit now. Yeah. Mm-hmm. Ah, cool. Yeah. Yeah. Excellent. So you've put the MACD aside for the time being. Cool. Yeah. Yeah, I mean the fact that it's based on so much more data is nice. Yeah. Yeah, totally, I agree. It's a great tool. Actually, I've introduced this to Vic and showed him a little bit, and he was intrigued. But he likes his MACD, so he wasn't as easy to convince. Yeah, yeah, totally. Excellent. Good. Excellent. Does anyone else have any other questions? We've covered a lot. I mean, all the material we've covered, the supply and demand, the price imbalances, and we've covered the strength. So I think we're pretty up to speed. As a matter of fact, I've compiled a video that shows the whole process of like spotting currencies to pair using the dashboard and then going to the charts and finding the price levels using the supply and demand software. And I'm going to forward all of this to Michael so you guys will have it all. So that should be excellent. This yeah, very exciting. Awesome. Very, very good. It's a pleasure, an absolute pleasure. I love it. Cool. Well, I think that pretty much wraps up the okay, Derek is speaking. Hello, Siri. Can you just review the carry trade again? That is coded into your daily range data. Green is yes. That's right. So thanks for your question, Derek. That's a good question. Okay, if we go to the symbol here, if you right click on any symbol and you go to specification, it'll bring up like a little box that looks like this, and in this box it'll show you all of the specifications regarding that symbol. And if you scroll down a little bit, there is something here that says swap long and swap short. And swap long means that you'll be paying 11 cents per lot every day to hold the trade, and you'll be earning 11 cents per lot. And if you're selling, you'll be paying $2.10 every day for holding the position short. And the indicator is going in and it's reading this information and it's coloring this dashboard here. So you can see that this one is green, and that tells us that you're going to earn positive interest on the position if you buy it and hold it overnight. If you sell this currency pair overnight, then you are going to be paying interest every night. And you'll see that in the swaps. If we see the swaps, you can see these. I'll show you. You can see swaps here. I mean, this is a swap here that I sold. I sold a position that was green, that showed a green dashboard. Here I did it again. Here I bought a pair that had a green dashboard. Here I sold a pair that had a green dashboard. The same. And these ones here were closed within the same trading day. You can see here's a big one, like the Kiwi American dollar. There's a bit of a interest rate differential there, and so this is telling us to sell. Sorry, it's telling us to buy, and I bought. Currently, the Kiwi is you get the highest returns. I think it's the highest, followed by the Australian dollar. But I had to pay swaps here, and this is a small position. You can see these are pretty small positions, but if you're trading 10, 20, 30, 40, 100, 500 lots, then it's an enormous amount of money, or it can be. And the good thing about these trades is if you pair the currency with the highest returns or highest yield and you match it with the currency with the lowest, and you trade in line with the interest rate swaps, and the pair just moves sideways for a week, you're still going to be earning money. Just because you're going to be earning interest in your account, as you can see, like that I haven't been so good at here. And so it's just a really good idea to keep that in mind once you guys get up into some serious position sizes. But then again, if you guys are in and out of these positions during one working day, then there's not going to be really any need to pay attention to that. But I just do it because I'm a kind of a long-term trader, and the smart money is investing in high yielding currencies, and it's liquidating assets in lower yielding currencies. And so this just kind of keeps me kind of mentally in sync with what's going on the larger time frames. Excellent. Good. Super cool. Well, I hope you guys are enjoying the material and the software and Michael's material. It's It's a very exciting time for you guys, for sure. Very, very exciting. You're very lucky. Excellent. I'm so pleased to hear, David. That's brilliant. Absolutely brilliant. Cool. I think we're kind of pretty much done for this session. You guys have, as Michael said, a little bit longer, and then you guys are going to be hitting the charts, which is really, really cool and be very exciting. So I look very much forward to following along with your progress. And again, if any of you guys have questions, you can either send your emails to me, or you can send them to Michael, and he can forward them to me, and I'll be very pleased to get back to you with any advice or help that I can. Excellent. All right. Well, I think we'll wrap things up. Is there any final questions before we finish up for today? Doesn't look like it. Good. All right. Well, I'll wrap this up, get it compiled and uploaded, and it'll be ready for you to see, Gary, tomorrow. So you'll be able to see the beginning, the bit that you missed, tomorrow, and I'll get this to Michael here tomorrow morning when I get out of bed. So you guys will have it by the time you get up and get to your computers. Cool. You're very, very welcome, Molten. Well, I'll finish up here then. I thank you all so much for being here. Thanks for your attention, and thanks for taking the time to be here and listen to my spiel. You're very welcome, Ka Singh. I'm very, very pleased you really like the material. And Michael, my man, thanks so much for having me. You're doing a good thing for these good people, and I'm super pleased to be a part of it on the sideline. It's tremendously exciting. Okay, that's a wrap. Thanks all so much for being here, and have a lovely day.